Whoop, whoop. Whoop, whoop. Let's go over to YouTube. We'll monetize this. We're making $250 on OnlyFans. Jesus. I want to be on OnlyFans. Content. Let's go live. Good morning, John. Especially if you invested in Meta. Full disclosure, I don't have that much Meta. I mean, I make 5 figures, mid 5 figures, but I should have significantly more. Hit that like button. It's installing. Anybody looking at the jobs numbers? Oh, and have I mentioned SMCI? This one's just crazy. It's still, I was looking at the forward PE of SMCI, and what's his chart of the day? Let me see. XLI. View channel. Live. 2-2. There we go. Is it going to put up a commercial? No, it didn't put up a commercial. Mofo. Morning, Cecilia. John. That jobs number, Christian, if you're watching it. Hold on, I got to turn this around. My shadows were a little off. It's the jobs numbers, the way it's calculated, John, my understanding is the way that it's calculated, even though it's calculated the same month over month over month, there are certain areas of the country that don't participate. Morning, Mike. And so the jobs number, while it's always good, by the way, Shopify up 5% at $80. Under 80, buy it. Over 80, you can sell it, but it's just, here's why 80 is the Shopify number. And somebody asked me about it yesterday. Should I sell it? I forget if it was live on the thing or not. But here, 80. The reason it's 80 is look at the 200-day. You're fighting the 200-day on the weekly. Now the MACD's going down, so the RSI's going down. I don't think if you capitulate and you kind of sit here. My guess is between 75 and 80, we have a fight struggle until now and next week. But I got to look at my notes. Oh, I do have to look up team. Because I said team yesterday. Team is one that I think, in my mind, I didn't research this one. I really like this as its AI component. Earnings stock slides 10% after hours despite Q3 beat. The reason it slid was just... this is what I want. I'm going to include this too. Because I think this is one that I've been considering for the core portfolio from its cloud perspective. There we go. I don't think he missed an opportunity. I think he'll have it again. I don't think it holds 80. I think it goes back to 75. Where is the damn? I know it's way back here. Yeah, there it is. We're gonna move this. So from its highs on the weekly, you can see 67 to 80. I mean, it's ironic that that's where the 21 day is, where that volume shelf is on the right there. The first volume shelf that probably gets built out a little bit more is between 70 and 80. So I think you bounce between there. How do they calculate in the border? I don't think immigration has anything to do with it. My understanding is that there is a component where certain states aren't included. And so, non-farm payrolls are not illegal crossing. I mean, they created 353,000 jobs versus 185 expected. You can't create payrolls with illegal aliens unless you're getting them illegal Social Security numbers. But the fact that I think the bigger thing is not, because remember the announcement always kind of gets scullied around and thrown around, but the revision is the big one. I don't know, Christian. I think you get at least 3. I think you get at least 3 cuts of a quarter point, I should say, 3 cuts. If he cuts a half in May, something's wrong. Okay, let me look at what am I doing? Atlassian stock. This is jumped as much as 11. Yeah. Migrate to cloud. Majority will migrate to data center and also prudently assumes that some servers. Great company with short-term risk. This was January 23rd. Thesis. I want to go to the conclusion. I'm the guy that reads the end of the book first. Leading SaaS company that has revolutionized the collaborative work management space with unique business model and has achieved impressive growth with a cost-effective sales and distribution model, a diversified portfolio strategy, and a focus on innovation. The company is pursuing ambitious goals. Although its revenue growth has been slowing down significantly, we believe that it will reaccelerate starting in 2025. However, the stock is facing some significant risks that could also short-term, such as macroeconomic uncertainties, competitive threats. I got a new comment. That's 2-1. Who's commenting on my YouTube? Let me see. Hold on one second. Because usually it's people joining the wrong one. Yeah. JW. Hopefully JW comes over. Yes, Christian, that's correct. But they are not included in those numbers because that's seasonal workers they are, if coyotes are illegally putting them across the border, it's not like the government is counting that. And the reason is because if they counted that, they'd have to pay Social Security. I mean, they would have to pay taxes. And you can't, as an employer, employ somebody without a Social Security number and be included in those non-farm payrolls. Yeah, that's why avocado shot up, I think. Okay, team. I think I'm good with that one. Let me just see real quick if there's anything else. AbbVie posted quarter. ExxonMobil. You know what? Let's see. 95-cent dividend. I mean, this is just... forward yields is 3.71. Did I put this in? Hold on. Biggest movers, Amazon, Meta, Exo, yeah. Yeah, let me look at Apple real quick. The CFO said that when the CFO got on yesterday, the new chart displays the seasonal tendencies of Apple stock price. Oh, look at that. Look at this. Seeking Alpha is getting into the TrendSpider trend of seasonality now. 10-year average. Wow, look at this. Every month is up except for September. September's a tough month for Apple. And that's when they announced their new iPhones. Dividend grade sucks. That's wild. So February's not a bad month. March is a really good month. June and July are, the summer. June is where they announced their new software, and I think you get that rollover in July. So I think that's why it's good months. Interesting, though. I wanted to look at Apple's China weakness. Guidance may keep shares range bound. Yes, I agree with that. You know what? Let me put this one in. Let me put this in. I got to generate the affiliate link. Let me put that in. Because I agree with this. 100%, I agree with this. The China weakness guidance may... I listen, even AI couldn't lift this one. Let me see. What did I put my notes on? I don't think I put my... No, let me put my notes on AI. AI... Spending on AI. Yeah. Yeah, but that's not in Wait, the employment report hold on. Let's say the inclusion of illegal immigrants, which they refer to as undocumented immigrants, in the monthly CPS used in employment situations each month. Let's say. This is from Wednesday, September 2023. Limit immigration and enforce those limits is protect interests of American workers. The current surge of illegal is unprecedented. Oh, maybe you're right. Yeah. Illegal grew 12.6% due to their education. Oh, this subcommittee on health and employment. This, this is the impact of Biden's open border, meaning you're limiting job openings. Let me see. Where's the conclusion? I like to read the end of the book first. Visa overstays all indicate the illegal immigration has accelerated dramatically since Biden took office. So often discussion about the current surge in general is framed in terms of hardships illegal immigrants face, but the need to enforce the immigration laws exists for many reasons, including to protect American workers. So this is just, dealing with the decline in labor force participation is so difficult because it is not only an economic problem or even one caused solely by misguided public policy. Fixing it will involve changing norms and reestablishing the importance of work. Simply turning to eager immigrants to fill jobs is easy, and it's why this is why we have done, but we face a clear, Morning, Scott. I don't know that, that's a... Yeah, I think they're saying that illegal immigrants actually lower the job openings. There's a strong relationship between the number of job openings and border encounters, especially during the Trump and Biden administration. I don't know. I don't have time to go into that. Who cares? It's not making me money. It's not losing me money. It's not making me money. Move on. It's kind of the way I think of things. Meta, Apple, Team, XOM. Oh, let me include the XOM dividend. That's what I want to include too. Let me see. XOM. Let's see if there's an XOM and CVX. Dividends roundup. Yep. There we go. Chevron, dividend declarations. Yeah. Let's do this. Let's include this. We'll include the affiliate link. Generate copy. $0.95 dividend. Here's others. Boom. Yeah. Listen. Privileged white guy. Does it make me money? Privileged white guy say. Oh, hold on one second. I'm on my do not disturb, but I got to text somebody something real quick. Okay. Sorry. I'm more worried about protecting other people's money by telling them to sell things. Let me see the core portfolio. Have you seen Meta? Have you seen SMCI? I have an order to buy SMCI at $583, which was the open price, which was the closing price yesterday. So, okay, let me go and open up some of these things. TQQQ, robots, analysis. Let us Do I hear an alarm? No. Okay. Finviz. Anything on Finviz that's crazy? Wah wah. RMCF. Penny, do not start. By the way, whoever requested it yesterday, just so you're aware, I did include in the newsletter a photo of me and the girls. Me and the girls at the end of the newsletter, just so you're aware. Somebody requested it, so I figured I'd put it in there. There's Jim Cramer with Tim Cook. What a douche. Jim Cramer bought in the Vision Pro. Evervent. That's a big buy. That's 3 big buys. Oh, it's an IPO. That's why. Okay. Aravent Biopharma. Yeah, good luck. $702 million market cap, 31 million, not horrible shares outstanding, but nobody covers it. Nobody cares. Let's see. Somebody's parking outside my house. Bond yield surge. What are the futures? Let me go to Seeking Alpha. Hey, I knew it. I knew it. Stop. Yeah, forget rate cuts in March. That's what it means. It's. I was just, hey, Daisy, get over here. Daisy, come here. Why don't you listen? Come here. Hey. No. Come here. Get under there. Hey. No. Stop. I was just telling somebody, we're still not in the realm of good news is good news. You know what? I'm going to include, Speechless, Seeking Alpha, Investing Group Leader. Mott Capital Management's Michael Kramer, huge beat. %62.5%. Average work week from all week. Private non-farm payrolls declined by 0.2. The current market consensus that we are in store for a soft landing. Yep. That's the big one. Let's see. Home. Where are the futures? Futures are, and NASDAQ up 0.37. That's all Meta and, hey. Rocket Labs. This is the one that folks were asking me about. A strong buy on growth prospects and backlog strength. Its valuations looks modest. There's opportunity set in. Nope. I don't think I want to invest in this, but it doesn't mean that I'm right. Commercial launch company due to the extreme engineering challenges. Yeah, it's a launch company. Quant says sell. So, unparalleled earnings coverage with our calendar. Where are interest rates going? Interpreting the treasury market. AWS has its mojo back. Philip Morris, NASDAQ, ExxonMobil, biggest stock movers. I got that one. Okay, we're going to start opening up from the bottom up. Oh, I got to do scans. Mofo, it's 9:07. Let me get the scans in before the next candles show up. Okay. What? Scans. Nothing in the core. What? Really? Let's see. Nothing in brokerage. Covered calls. I don't like this group. DJIA. That's the Dow Jones Industrial one. That Boyle, another one. I think Boyle fell yesterday, if I'm not mistaken. SRTY, these are short. SMTD, both of them. I mean, I think the MACD's just kind of fluttering around. Yeah. SRTY's putting in a nice little shelf. SMTD, nice little shelf. Levered ETFs. Let's look at low-cost Vanguard. VO instead of VOO. VO is that the complete stock market? That is the mid-cap. Didn't even know that. Mid-cap. Spider sectors. Nothing there. Let's look at not owned. CGen. C Limited. Wow. That's an interesting one. Okay. OGN. Organon. That one's solid mover. I mean, we talked about that one. K-Web. I'm not bringing up AbbVie. Good earnings. It's one you can get. I think I'll put it in. Win. Tractor Supply, which is just overextended. Sundial. Sundial. Yeah, I think you requested it, Pavan. I threw it up there. Tilray. No, I'm not going to put in any of those. Okay, let's look at the Dow. Anything in the Dow move? I don't think so. Yeah. Have I mentioned SMCI? I've been saying that since I think it was 260. So, and let's be honest. I mean, I was getting some pats on the back yesterday from some people I don't know, who had messaged me, who said, wow, look at your portfolio on Savvy Trader. Can you tell me what your secrets are? 3 different emails yesterday about Savvy Trader, and emails just from folks I didn't know. And it seems like they were fishing for what's in my portfolio without paying for it. I mean, I'm perfectly honest with everybody. What's in that portfolio? It is everything that I've talked about on this podcast. There is nothing in that portfolio that I haven't. Intel's in that portfolio. And that's a big loss. But that portfolio is doing really well. LMT, Lockheed Martin, FEM Booking. I'm not including 3M. 3M is a broken company. I mean, you can play it for a nice pop, but I need to put in Zuckerberg. Let's see. Yeah. Zuckerberg with the dividend gets paid $700 million per quarter. Becomes, let me Google that. Zuckerberg dividend. Expected to receive $175 million in dividends. Okay, so it's 175 million. Per year. Penny is the brown one. I'll show you. So, the little fucker who makes all the noise is Penny's that one on the left, and Daisy is the dark, like brown, black, white. Both are Cheweenies, but Penny has some pug in her, we think. They're both rescues, so Lord knows what kind of parents they had or what kind of breeding was going on. But, yeah, that's Penny, that's Daisy. And both of them are scared to death to be picked up like this, so. But if somebody comes near my house, I mean, it's an Kramer Super 6-pack. What the hell? Why is Kramer taking credit for Super 6-pack? I mean, I guess that's the new without Tesla. What's the new one? Super 6-pack. He loves creating these names, and then CNBC runs with it. I think, yeah. Okay. We're just going to go over here, and I'm going to, okay, I've got my scans. Copy. There we go. I can do that. I got my scans. I got... How does the NASDAQ do in February? Not well. There's a new PE indicator in TrendSpider. Here is SMCI. As I was going through today yesterday, here is XOM's dividend. Here is team. Here is Apple. And here is Amazon. And here are the biggest movers. And here's the jobs numbers. And I am going to go over here, and we're going to do Seeking Alpha because we've got some rating changes. We're not going to do the trading portfolio. We're going to do the... By the way, here's my trading portfolio. Just, you know what? I'll show it in Savvy Trader. We got QQQ. Got a downgrade to a... It says downgrade from a strong buy to a buy. Yeah, okay, that one's right. I don't want to hear you. I know you went outside, so I know you're fine. To a hold. Ooh, NVIDIA hold. Hey, come here. Come here. Get over here. Hey, come here. Ooh, Penny. Penny, come here. Come here. In there. Get in there. Come on. I'm going to start this up so you can't be out there, okay? We're starting this up. Okay. Yeah. Yeah, I don't have kids. No. Okay, so we got the Cleveland Cliffs actually got a downgrade, an upgrade. Hold to buy. Pre-market is down 1.68%. I just told somebody to sell it. Yeah, golden retrievers don't bark. They're so good. Why my two? Yeah, I mean, try having a little, your golden retriever doesn't have a Napoleon complex where they constantly feel like they're being challenged because of their size. That's what these two are. Phil LeBeau has some breaking news. Ford January sales up 4.3%. I just got a whole bunch of Ford stock from Webull. Let me see. To be claimed. No, I don't have anything to be claimed. Wah, wah, wah. Okay. Bristol Myers. Steve, I mean, before I start the podcast, I'll look at it real quick. Bristol Myers is, I mean, does that chart excite you in a time? This is from July. Now, I can understand, through October, a lot of stocks looked like that. But from October to here, does that excite me during a time? I mean, look at SMCI. I mean, let's look at SMCI on the opposite side. Let's look at SMCI. I'm going to remove all annotations on here because let's look at SMCI from October. We'll just go, the end of October here. So end of October, beginning of November, 240. I mean, that's up, and this hasn't even opened yet. We're at about $600, 154%. Okay? Let's look at Bristol Myers Squibb from July. Because the market's been up. And even the Qs are up. So let's go to October, end of October. You were right here. Yeah, let's say it was about 51. Down 6%. I mean, does that excite me? No. Do I think it's going to turn around? Well, let's take a look at a weekly chart of this one. When's the turnaround? Just from a perspective of, hey, what do I think of it? I don't want to invest in something during a legendary period is doing this. That's why I got rid of my UNH in December. I saw it was underperforming the market. And I said, you know what? I just don't want it. I just don't want it. By the way, SMCI is back down to 590 in pre-market. So I will probably be picking more up. But I may break my Friday rule. Okay. But yeah, Steven, I can't get excited. And I say this a lot, and I don't know if you're new, but I'm a tech investor, a big cap tech investor. And that's the way I've made my money. I've diversified over the years to different things. But what do I think of Bristol Myers? I just don't think, we'll look at Bristol Myers over here. The PE is 12, the forward PE is 6. That's okay. You get a 4.61% dividend. Performance over 1 year, you're down 33%. Your average at target price is 60, but take that with a grain of salt because, it's a lot of these are, well, it doesn't look like they're older, but everybody's downgrading. And understand, those are like, hey, Hail Marys, $60. They just announced earnings. Doesn't look like it moved. So I don't have to analyze the move. Now, Chief Executive Officer, buying $150,000 at 48, that's not enough to make, me think, oh my God, it's great. Look at this. This dude at 67 sold $3 million. Oh, and the board chair and CEO last year sold $17 million at 74. So, you're not a dumb guy, Pavin. This is not we're not doing a 100-yard sprint. It's a marathon. We're I heard somebody yesterday, and this joke is great. This isn't a Tinder hookup. This is a marriage. If you want to get AMZU, that's a Tinder hookup. Microsoft is a long-term play. You take a look at this. If we go over here, I want to show you something because I'm going to show you if we chart Microsoft. We're going to go over here and we're going to chart this. And we're not going to do that one. We're going to select symbols. We're going to do Amazon. Okay. Now, Microsoft does have a dividend, so maybe I should do performance total return. We'll just do total return because they do have a dividend. Now, 1 year, you look at Microsoft, 61%. Amazon's 51%. Why the muted stuff? Because you're up 61% over 1 year versus Amazon's 51%. Year to date, Amazon's up 4%. Microsoft's up 7%. 6 months, Microsoft's up 20%. Amazon's up 20%. 1 month, Microsoft's up 9%. Amazon's up 6%. Microsoft is minus 0.53, over 5 days. But the biggest difference between Amazon and Microsoft is, and a lot of people will say charting doesn't matter. Charting absolutely matters. Look at Amazon. Their all-time highs up here at 190. Okay? Versus Microsoft, which has made an incredible move. When you go to the weekly on Microsoft, that one, you've passed your all-time highs at 339. So why the lackluster? It's not a lackluster. It's that Microsoft is up in the long term and the short term, and Amazon wasn't. Amazon's playing catch up. That's why. But it's a long game. You shouldn't, AMZU is something that you absolutely sell. Listen, I sold my TQQQ yesterday at 53.80 as I was doing the podcast or the newsletter. Right now, TQQQ is at 55. I sold it 53.80, and I have that note right in there. I took a profit. If you are up on AMZU, do not play the "oh shucks, I should have" game. You took a profit. Oh shucks, I should have. Oh shucks, I should have put $1 million into SMCI. Oh shucks, I should have. No, you don't play that game. You take your profit. You do what you do. We're for trades like AMZU, you're hitting singles, not home runs. If you're hitting home runs, you're playing the game wrong. So there's a big difference between, hitting, the home runs come from long term in my mind. The short term home runs, if you're playing for those, you're going to get burned. You just will. It's just a matter of, when. And listen, everybody's style is different, but when you're getting interviewed, by the humble trader about $1 million short selling that you did, you're gonna get burned. I saw a great interview with it wasn't Danny, it was Steve something from the Big Short, one of those guys that did the short, and he's moved from a short seller to a long seller, and he said, "I'm just happier." He goes, "I'm not stressed." He goes, "I know the market's going to go up. As long as I pick good quality stocks, I don't have to worry about them crashing. And I don't have to worry about the market valuing these." So it's just a difference. But okay, let's start out with the Qs. I have a 27 inch. This is a 27. I think it's. Let me hold on. Let's see. I think you'll be able to see this. About this Mac, it is a 27 inch Retina 5K iMac 2017. It's still got the Intel Core i5 processor. Wah, wah, wah. Am I bragging? No. But yeah. My laptop does not expand like that. My MacBook Pro. It's part of the reason why I want a one of those curved monitors in here, because I can show much more. But yeah, it definitely displays. It's part of the reason why you see different screens when I use my laptop to broadcast while I'm on the road. So, okay, we're going to get rid of that. We're going to go over here. I'll start out with the cues. I'm going to hit record, so I'm ignoring you folk. So when Christian comments about something that I do, I'll say it afterwards. Chris, if you've got a suggestion for a curved monitor, ping me on somewhere. I'm just starting to look at them. And essentially what I plan on doing is I've got a couple of thoughts on Apple. So I'll definitely go over it. But my plan is to have a big curved monitor here and run it with my MacBook Pro, or I may buy a MacBook Mini, or not a MacBook, but a Mac Mini. But I may run everything off of my MacBook, because it's an M1 chip. It's got enough to do what I need it to do. So yeah, that's where I'm kind of leaning towards, is going to Amazon. I don't know that I'll do Samsung, but oh, you're welcome, Pavan. Yeah, share my podcast, dudes. People have to start sharing this stuff. I give away a lot. Okay, my order was canceled for SMCI. Yep. Nothing done. Okay, so let's look at SMCI. Where did it open up? Where is it going to? It opened up at 590. So you opened up. It is completely overbought. And I would not suggest getting in here if it were just a regular buy. But I won't go over this with, oh, come on. Why are you not? Okay, how do I delete these? I hate this. I hate this. I hate this. I hate this. Fidelity's app is horrible. And I did talk to them about that as a, there were a few people that got on the phone with me. If Alex is here, Stuart said he's going to get back to you. If anybody's interested in Fidelity, by the way, just let me know. There is some bonus stuff, I think. But I can hook you up with my guy at Fidelity, Stuart. He is fantastic. He's just amazing. His team is top notch. Oh God, I'm going to be down so much. I'm going to be down so much. It's unbelievable. I don't even want to look. Hold on. Am I down six figures? Not bad. I'm down 1%. And with Apple being down 3%, that's saying a lot with the rest of my portfolio holding things up. Whew. It's 5 figures, but more than Mark. Yeah, SMCI, let's look at the 5-minute real quick. Let's see how we traded, because there's going to be a gap there, I think. Not really a huge gap. We're in the first 5 minutes. My preference would be today to see it pull. I don't think it will. But if you wanted to get into it, and you're just dying because you have FOMO, and I may add to my position because I am building a very large position of this in my Roth. I'm trying to see about volume but see how the MACD is kind of just trending down. The RSI is at 75. That new PE, yeah. In fact, I've got it on here. Visualize value with the PE ratio indicator. I have not started using it. It is on my other workspace, so it's not on this main workspace that I use. But I really, really like it, especially the fact where you can compare 5 companies with it. TrendSpider's kicking ass. I told him last night. Yeah, we're taking off. It's getting back to 610, 620. I mean, just look at, if I go to a 1-minute chart on here, you'll see we're taking off. See how it's just taken off? That MACD is just out of control. It's overbought. Yeah. I mean, here's the thing. If you want to trade on a 1-minute, chart or a 5-minute chart, just look for confirmation. But look at how big that move is. People are getting into this one big. Even to start the day. If I move back to yesterday and we look, this was the gap up yesterday right there. See how it dipped down here. I got super lucky and I bought more at about here. This was at 11 o'clock when I got off air, and I just kind of, hey, it's on its way down. I'm just going to buy more. Added a little bit there. But I expect this one to get to 700 by the time NVIDIA has earnings. So, let me see if everything opened up. I'm down, but Apple's starting to come back a little bit, I think. Okay, let me go to the Qs. Let me start this mofo. Okay, we're going to start this. Good morning. Happy Friday. Happy Jobs Day. I mean, that's the big news of the day. Have I told you about SMCI? I'm going to keep saying that every time I add to it. QQQ, we're on the Qs. Jobs number, by the way, we're still in the good news is bad news for the market. It took futures down. And the reason it took it, just the jobs number came in at 355,000 versus 170,000 expected. So it doubled what was expected, but we are still in the good news is bad news. It's great news that, hey, we're creating more jobs. The unemployment number is coming down, but it took absolutely rate cuts in March off the table. So May is the next rate cut. So what did the market do? Market pulled back. I think Qs at the beginning were up by 1%, driven mainly by the earnings, which we will go over. I've talked about it, how that button hook started to happen, and then we just kept value confirmation. And now we're kind of on our way down. I mean, this is a 4-hour chart. So 4 hours from this, we're pulling the volume. I'm going to pull it back to July. This is where I like to look at the Qs as far as volume goes, because it'll tell us where people are holding from July now. And you can see the button hook right there. If you don't know what a button hook is, my newsletter is free. You can go and look at it. The button hook explanation is in the education section. That's a paid section, but you can kind of figure it out. Again, the newsletter is absolutely free. And for anyone that asked, there was a request on Facebook Live yesterday for me to show me and my dogs. So I had someone take a picture. My girlfriend took a picture of me and my dogs, and it's at the end of the newsletter. So if you'd like to see that, yeah, you can subscribe to the newsletter. But if you want anything, again, it is a free newsletter during the week. I think it will help anybody that has interest in stock, specifically anybody that listens to this podcast. I know There are people that listen to this podcast that have not signed up. dailystockpick.substack.com. You should go over there and subscribe. But here's where we're at. The Qs are up 0.66. I would expect us to wind up today. And the earnings are the reason that the Qs are going to wind up. The problem is Apple's going to wind up down, so most likely my portfolio will wind up down. Here's the MACD crossing down. The algorithm has not gotten us out, even though we lost confirmation for a couple of days. Those little candles down below the 9-day, we filled the gap back up, and we'll probably finish the day, I'd say around 428, between 425 and 428 is where I would guess. If we dip down below 410, I think you've got a problem. I think you get probably down to, 420. I think you get down to about 412 or so. So you got to kind of look at the markets if you're playing it short term. I did put in the newsletter yesterday. I got out of my TQQQ. Reason I got out of my TQQQ was I had made a nice little profit, 7-8%. I think I was up 12%. But remember, it's a triple levered ETF. And you don't want to hold these for more than a day or two. I've been holding this since January 11th. If we go back here, where is January 11th? January 11th is right here. So if I bought January 11th right there and I got out, there's a nice 10% gain. So I think it was around 8-9% by the time I sold it. But yeah, I sold it at 53.80. And the reason I sold it was we had huge earnings coming up. And the earnings from Microsoft didn't move the needle. And so I was saying, hey, I want the needle to move, but I'm not willing to hold on to a triple levered ETF. So I held on to my QQQs. I still made money. I still own Meta. I still own Amazon. I own a ton of Apple. So I still made money. It wound up, portfolio's down today just because of Apple, but we'll go over that. Qs, you have confirmation over that 9-day. That 9-day is starting to move. The MACD is a little bit high. It's not super high, though. Look at where it gets to, and it's starting to turn. The RSI quickly dipped down to 44, and now it's back up at 57. So I think we do have more room to run. I think this is just a look at this. Again, read this article in the newsletter. U.S. job growth blows past consensus in January. Forget the rate cuts. So we'll have a bunch of January numbers that come out, and we can take a look at those. One upgrade in the core portfolio. Cleveland Cliffs got upgraded from a hold to a buy. Cleveland Cliffs, I say $20 is your swing. Anything over $20, you sell it. Anything under $20, I think you can buy it. I like this company. They're solidly gaining. In their basically I think they raised their prices 3 times without affecting demand. So it's a steel company. They're going for the U.S. steel buying, but I don't know how that's going to work out. A couple of downgrades. QQQ got downgraded from a strong buy to a buy. Doesn't mean you get rid of it. It doesn't mean that you do anything with your portfolio. Look at that stock chart. Qs are something that you basically look at for a bi-yearly, maybe a quarterly basis, but you don't trade the Qs. You trade TQQQ. So just understand that. And another downgrade, NVIDIA. NVIDIA in the Seeking Alpha Quant got a downgrade from a buy to a hold. Does not mean that you do anything with NVIDIA. I repeat, you do nothing with NVIDIA. If this were to dip, you buy. Simple as that. If this were to dip, you buy. Look now, the MACD way up here at 20. The RSI at 76. This is overbought. It absolutely should be dipping. It is not. The valuation is not crazy because if excuse me, let me get a glass of water. If SMCI's earnings, if TSM's earnings, if AMD's earnings, if all of these chips companies' earnings are anything to indicate, and the past earnings from NVIDIA, this quarter is going to be huge. It's going to be all about guidance. You can see the 200 days moving positive, the 50 days moving positive. Boy, don't you wish you bought at this golden cross at 491, where you thought, God, it went down to 475. I thought it was a golden cross. I thought this was supposed to go up. Well, if you bought at 495, you're at 647 right now. So it's a quality stock. You do nothing. Even though it was downgraded in the quant, you do nothing with it. You add to it. Anything under $600 is a gift on this one before earnings. Anything under 640, I'm buying today. So if it dips down today, just because that quant rating went down, it's the valuation that kills the quant. The valuation, it's D. Remember, the non-GAAP forward PE, this is based on their estimates. It's 51. If you want to buy a stock and you want to buy it today, that's going to have NVIDIA earnings stuff, it's SMCI. Get this one under 600. I'm telling you, I think it's going to be 700 when NVIDIA comes out with their earnings. The forward PE on this one is 27. That would mean if this had the forward PE of NVIDIA, this would be a $1,200 stock. Simple as that. I bought more of it. I continue to buy it. You wonder why I'm number 3 on the trading portfolio on Savvy Trader. It's because of this stock. It's because of NVIDIA. It's because of DraftKings. It's because of those little things that I do. I'm not, they're not all home runs. I have Intel in there, which is down, I think, 11% since I bought it. So it's the little stuff that makes a big difference. What are the biggest movers of today? This is, Meta. Meta posted earnings that it's up 15%. If we look at the chart on Meta, if you own this one, kudos. I think the buy price was under 400. You can see 389 was the all-time high there. It blew past that. When it got to 400, it pulled back to 389. Did you buy more? I didn't. I bought the Qs. I have some exposure to Meta, but I didn't buy enough. This one, they declared a dividend. We can look at this story. They declared a 50-cent dividend, I think. They'll do $50 billion in buybacks. Mark Zuckerberg, let me look at my note real quick. Mark Zuckerberg, with the dividend, gets paid $700 million per year. So he becomes a billionaire every 1.5 years again, just with his dividend of this stock. And they are going to, what the dividend and the buyback tells you is that this company is in a super strong cash position. Biggest mover. Shares of Amazon soared as much as 7% after they beat results. Amazon, I've said it before and I'll say it again, it's getting back to its all-time high. Don't look at a short chart of this one. That yellow line that you see there is part of the weekly that I look at often. Its RSI is at 75. Do you want to buy it at 170 here? I think anything under 170 today is a gift for long term. You can see the all-time highs right here at 187. That's where you're going to. You're at 170 today. Boy, don't you wish you bought down here at 155. Again, biggest movers of the day. Some popular social media platforms. Snap was up 6%. And this is all on Meta. I think Snap's earnings are coming out. Let's see when they're coming out. They're coming out, I think it's next week. Yes, February 6th. This stock has just been a monster. I do own it. Algorithm has you out with a 2% loss. I wouldn't have gotten out at 16. You're trading at 1660. The multiple on this one is crazy. If we go over to FinViz and we look at Snap, they are not making money. Just understand, Meta is making money. Snap is not. Snap is losing $1.3 billion. It's not like they have to dilute. They have plenty of cash on hand. They're making plenty of cash. But they are losing money. That's the big difference. This one may come back and say, hey, we're losing money. But year to date, it's down 2%. Meta's way up. This one's up 59% over 1 year. It is 7% below its 52-week high of $17, but the average price target is $14. Nobody's raising their price target above here. They're all saying, hey, it's about the same, 20, 22, 17. So Snap went up. We can look at, let's see, Pinterest probably went up. Yeah, Pinterest went up 4%. Snap's up 4% in the market today. Pins is another one. This is all on the back of Meta because Meta's earnings were so strong. Pins is up 2%. Remember when I was telling you, hey, under 30, you want to buy this one? Wait till I was even back here before Elliott Management got in and said, hey, under 20, this is a bargain. This is a social media platform that actually makes a good amount of, they have really good active users. I don't know if they make money, but with Elliott Management in here, you can guarantee you that they're going to make money. Yeah, they lose $219 million. So they may become actually cash flow positive on their next earnings, which is coming up next week, February 9th. They may actually, post a nice little profit. Who knows? But again, you want to be in those names. Now, biggest losers, it says Skechers. By the way, I'll bring this up too. Deck had their earnings. This is the Deckers Corporation. This is the outdoor companies. I can't believe it, but they blew it away. They blew it away, and they are up 13% today. I got this one wrong. I thought boat shoes and crap like that were just, a thing of yesterday. Yeah, it wasn't. But one of the biggest losers, it doesn't really put the biggest losers in here. Oh, before I do it, Amazon gains after holiday quarter, sales shine, profits soar. Read this article if you want in the newsletter. It's a really good one. Andy Jassy just has stuff on par. One of the biggest losers, though, is Apple. And even though their earnings shined, it was a really good quarter with earnings. I still say 180 is the support level here. You can see that volume shelf right at 178. But this is a long-term play. Algorithm got you out with a slight gain. Do you buy here? If it's long-term, I think you absolutely buy. Their dividend is here on February 9th. It's a tiny dividend. It doesn't matter. Don't buy it for the dividend. But you're seeing right here that $200 price point is really, really hard to get through. And so if you're going to buy it here at 183, just understand that $200 is probably your cap. Your bottom is probably 170. The issue was China. It's China. It's China. Cook attempted to defend the company's position in the region, telling analysts the iPhone accounts for 4 of the top 6 smartphone positions in urban China. Well, do you want to own number 4? You want to own number 1. And now worldwide, Apple is the number 1. They overtook Samsung. But China is just kind of weighing on it. And Cook tried to say, well, it was, currency. Currency, schmerrency. It's not. The fact that they increased their revenue, the fact that they have some products in development, the fact that the Vision Pro just came out, I think it's good. Here's my notes. Apple beat, and I'm long because of AI and Vision Pro. Review is that the Vision Pro is like the watch. The world in Vision Pro is so good. The reviewers all say while there are issues, you want to go back into the Vision Pro world after taking the Vision Pro off. It's magical. That's been the key word, by the way, for me, magical. That's been the universal review, but at $3,500, I think Apple will figure this out with the first version and push into a new hardware line of sales like they did with the wearables division. I think this one opens up the services. I think it opens up a ton, and that's just Vision Pro. The other key feature that Tim Cook brought up is that they are pouring money into AI. He said they will have an announcement later this year. My guess is that comes out during their June software, WWDC, I think it's called, Worldwide Developer Conference. That will be in June. I think with the fact that you have all of the iOS devices running the same iOS, I think you have a reason to upgrade to the iPhone 16. With that, they will come out with some type of AI, not that will run on the 16, but will run on the 14 and above. And so you're going to be forced to upgrade if you want the new, quote unquote, Siri. And I think there will be a premium, quote unquote, Siri. Just understand, I do think that Apple's AI will most likely be something that will take ad revenue away from Google. I think it will take some ad revenue away from Amazon. I think you want to own all of these companies, but I do think that Apple probably has the biggest push into this because they have the deep pockets. They didn't up the dividend. They didn't up the buy. Where are they putting their money? They're putting it into AI. They're spending on AI. The CFO said that the March quarter may just be flat, so they may have to tweak some things down. That's the reason why this stock pulled back by $6. That's why it's trading lower today, is that 100% was the reason that took this down. So it was that CFO comment. The stock was up, and then that CFO made that comment. And this is the comment: in the March quarter, we are unable to replenish channel inventory and fulfill significant pent-up demand for the constraints. That's what he said. And typically what they do in the March quarter is they run this up. So it's going to be a pullback. You're going to see some weakness in this stock. I think you add to this for long term. And I'm not trimming this one at this levels. When it gets to that 190 level, that's when I start to trim. Again, my position should not be your position. I own tens of thousands of shares of Apple. Tens of thousands of shares. So this move down by $6, yeah, that's a nice mid five-figure loss for me just in the day. So, understand, my position is not your position. I am significantly different. I want to trim this. I don't need the cash, but I want to trim this between 195 and 200. Just in my retirement accounts, not in my brokerage account. I don't want tax stuff. But when that news came out, that was the big one. Team, which was the other one that I mentioned yesterday. This is one that and the reason I said it was, it's a cloud stock. I am considering this for the core portfolio. I do not hold a position in it personally, but I like this stock a lot. I like the if you've ever used Jira, if you're a software developer or anything, that's what this is. This is just it's a SaaS company. The problem that I have with this is, and the reason I'm slightly reluctant is, I do think that some companies wind up developing and get software developers and they get off of the software platforms. I think AI has become that. And I posted something on my Twitter yesterday from Sam Altman, where he said he thinks AI will be able to have a company, a person in a garage, build $1 billion company by themselves. He thinks that will be able to be achieved through AI. I think that puts SaaS, software as a service, I think that puts those companies in the crosshairs. Because I think they have to develop things. And Team is a SaaS service. I like it. It has shown super, super promise. It's not making money. You can see right here, it's pulling back. I do think that you get back to those $400 levels. I think this one has some rain in it. But understand, it's a long-term play. That's why I said it. You can read this article about it. You can read more about it on Seeking Alpha. I said Exxon and Chevron, I might buy for a nice, 1 or 2% pop in those companies. Not ZOM, it's XOM. I did not do it. I should have done it because XOM is up 0.05%. It popped all the way up to 104 or so. I thought it was going to come up to this 104 level. It did in pre-market. They announced earnings and they increased their dividend. Here's, for all the dividend people that love dividends, here's the dividend increases. General Motors, Shutterstock, Chevron, they all increased their dividend. And Chevron, by the way, had great earnings as well. It's just oil. I mean, they're going to make money and they're going to return it to shareholders. Dividend declarations, Kinder Morgan, IBM, Marathon Oil, and Exxon, they all said, hey, here's a special dividend. That announced a dividend in the last week. Upcoming dividends, Las Vegas Sands, MetLife, Intel, Starbucks. Yeah. So if you want, I think this, again, the XOM and CVX play, both lower year over year, but both had huge dividends and cash flow. Like I said, it was a nice 1 to 2% gain over a day, a couple of days. Remember, we're hitting singles, not home runs. SMCI is absolute home run. But we want to hit singles. We want those 1 and 2% ones to be able to do that. SMCI in pre-market, let's just talk about it. I posted this yesterday. The algorithm is up 85% over 24 days. 1 month, you're up 85% in this name. 1 month. I posted this. Make sure that you take a look at this because SMCI, in my mind, I just went over it. I will probably be adding to this. I think 580 provides a decent entry point. The PE ratio for me is just, it's 17. The forward PE is 17. I'm sorry, it's 27, not 17. It was 17. That's why we jumped from 300 up to 600 within a matter of just, weeks, is because the forward PE went from 17 to 27. But you doubled the share price because you're starting to make more money. Now, it was brought up to me yesterday in the private Facebook group that didn't SMCI, devalue shareholders? Didn't they issue more stock? Well, they didn't issue more stock. They issued a bond, and I think they may have issued more stock. I forget what it was, but they did devalue shareholders by issuing more debt. But the difference between that and somebody that issued a company that's not making money that issues more shares is that they used that money. They were clear and specific with how they were using the money. They used the money to get the hardware to make the sales so that they could push it onto customers. And what they did was they held their margins. That's why you're seeing this company make so much more money. So issuing shares and doing devaluing and stuff like that, it's not always a bad move. Not always a bad move at all. You know what was a bad move? Intel. This one is trading at 42.23. I identified 43 as my out point. I'm getting out. They announced, let me see, I'll go over Seeking Alpha because they announced that they're going to delay something. I think it was a plant or something's going to be delayed. Let me see exactly what it is. This is what you do. You go over to Seeking Alpha and you can find exactly what you want on the news on stuff. Intel's Ohio delay likely due to excess capacity, not roadmap concerns. That's an analyst. Intel delays 20 billion chip facility in Ohio. This is going to dip down to 3 handle. I'm getting out my $25,000. I think I'm going to take an 11% gain. I bought it up here at 48 with the algorithm. The algorithm got you out with a 10% gain. I'm getting out probably with a 10.01, 10.02, somewhere around that. It'll be a nice $2,500 loss. No worries. I've made that in SMCI plus some. But I'm done waiting on this one. I think we're getting down to the 38 level. Honest to God, I think that's where we're going on this one. For TrendSpider, folks, there is a new PE. Let me look at this. I think I closed it by accident. There is a new PE indicator suite that you can import the PE stuff. This is really, really good. Understand, I am both a fundamental and a technical trader. Fundamentals are, to PE. Technicals are just the stock chart. Jason from TrendSpider, he will say it many times on his live when he goes live. He is just a technical trader. He doesn't care what the PE is. He doesn't care about, how much revenue the companies make. He doesn't care about forecasts. He doesn't care about profits. He just cares about the charts. And that's the type of trader that he is. You can pick whichever one you want. I'm a mix. I am probably more of a fundamental trader than I am a technical trader. But I do understand charts. This PE ratio is really good. Sign up for the newsletter. Get in there. Take a look at it. Now, let's see. How good is Qs during the month of February? Not good. February is the least winning month of the NASDAQ over the last 20 years. Red 60% of the time. If you're a TrendSpider subscriber, go over, look at the Qs. You can go down to seasonality. You can add it in on your thing. Look at the seasonality, and we're going to change this to not week of the year, because the week of the year, this is a good week. We can go back to, let's see, we're going to go back to, I'm going to take this back to 2004. Whoop, whoop, whoop. What was the number one movie? I don't know. The next couple of weeks, pretty good. Not bad. You look at the week of the year. Then we're going to take a look at the month of the year. And I'm not, basing my stuff. Look at the month. So it's a 45% was positive. So you more than likely are losing money. Good time to get in. good time to get in. I don't think it's a bad time to get in. I think you get in when you're going down. We have been going up on the Qs. So if we get a pullback, you get in. Just understand that's my strategy in this market. I've identified since September I was a bull. Now, I was wrong in September, but I've identified since September I've been a bull. October took us way down, but since September I've been a bull. I've been adding to the Qs since September. I was down. I mean, look, I was down what, 7% in October? But since then, if you bought there and you lived through that 7%, you're up 14%. Now, you may come down here and you may only be up 5%. We're playing a long game here. We're not hitting singles. We're trying to hit singles, not home runs, but we are playing an absolute long game. Let me remove this segment. I wanted to get out of there. I was trying to hit escape. But if we look at the weekly of the Qs, again, you're at all-time highs. You kind of broke through them back here at 408. I bought more at 406, 404. I bought more. You might pull back there. You very well might pull back here to 374. But if we pull this, volume indicators, I like to go to the last high kind of pooch that I saw. And you're seeing most people are holding in here at 358. That goes back to the highs in November 2021. So most people are kind of holding here in 360. You got to put out a new volume shelf. So, but the Qs, just understand I'm adding to. I have my note, deck beat again on earnings was up 5%. So something that doesn't get me excited. Again, it didn't get me excited, but I was completely wrong. Malcolm Price from Spotify wants me to look at CSIQ. Have I mentioned SMCI? CSIQ, Canadian Solar. Solar's been tough. Solar, you guys know, I invested in Sedge. I wound up losing a couple $1,000s in Sedge, where I was up a couple $1,000s. Yeah, Sedge and Canadian Solar, CSIQ. I just stay out until you don't try and time the bottom. I mean, in this market, again, I kind of did this in the previous in Facebook Live or YouTube Live, but we're in the biggest bull market that we've seen in a while since October. And if we go back to October, you're up 15%. Not horrible, but you use the algorithm to get in and out. The algorithm gets you out, loses you 4%. Buying and holding for 24 months loses you 15%. It's not, it's not expensive. It's not cheap, but solar, this could go up a ton. You're seeing December upgraded. If we look at some insiders, there's no insider trading. Average target price is 30 or 22. I think that just caps you up there at 30. So CSIQ doesn't get me super excited. Daniel Bradley, congratulations on your retirement. What are your thoughts on GE split? Kind of the same on the Walmart split. It was brought up in the private Facebook group why I didn't make a bigger deal of the Walmart split. The difference is GE is actually spinning off some businesses. But GE, for me, I got out of that in 2001. I don't care to get back into it. Probably a little bit of a mistake. If you look at this monthly and you go back here, here's where I showed you where I got out of it. I got into it and I got out of it. I got out of it in that downturn. Thank God I did. This company is just one that's kind of reinventing itself. Now, if you got into it here in December 2022, we're going to move that down. If you got in there, you got a nice 80, 90% gain. I mean, that's a solid gain. What do I think about it? I don't know enough about the GE split to talk about it. Dex, congratulations. Appreciate your insight and thank you. You're welcome. Alex, congratulations on your 4-year anniversary. Jay Steinbeck, congrats. Any thoughts on SOFI continuing to drop after earnings? It's already returned to pre-earnings. SOFI is a pump stock. So what you have to understand is when you get into SOFI, you have to identify the ups and downs. What I said, look at this. See the earnings that were down here, 32%. I mentioned it yesterday that we could go, we were down 12%. If we go down 32% and you say, okay, from the earnings pop and you go down 32%, where are you going to be at? peanut butter jelly time, you're going to be right at that support level right down there around $6. I'd expect it to get down there. There's nothing that tells me that this is, turning a corner. I still think it's a good, trade. I think you buy it under 8, and I think you wait until it gets to 9 or 10. But you got to wait for catalysts. So I don't know where it's going. It is super expensive. I mean, you go over here to FinViz and you look, the forward PE is 29. So let me just point something out to you. This is not making money, SOFI, okay? And the forward PE is 29. There is something called an AI train that is currently running. And SMCI is in the middle of it. And the forward PE is 21. Which one would you have rather held over the past month with a forward PE of even less than what SOFI is? Again, don't get trapped into these hype stocks that you want to sit and hold. You've got to identify where you get in, where you want to get out. But in something like SOFI, I wouldn't hold it for a while. Yeah, I wouldn't hold it for a while. But Jay, thank you for the comment. But yeah. Carol Clancy Murphy, good for you on the new life. Keep up the good work. Jay Powell, oh my God, amazing. Thoughts on Melly? Melly is, I've said that personally, I think Melly is great. I think it's a good company. I think they're doing really good things. I think the stock is solid. It is the Latin American Amazon for me. And this is just me. I'd rather hold Amazon, to be honest with you. And the reason is just the valuation. So Melly, we talked about it. Here's the weekly. There's the chart that I think the direction that I see it going in. I think it's going to continue higher. I think it's all-time highs here at about 2,000. I think you get back there. But when we take a look at Melly, and we'll chart it in Seeking Alpha as well. Melly's forward PE of 51, PE of 90. And you look at Amazon. Now, this may have updated with the earnings or not updated with the earnings. Look at the forward PE of 32. I mean, look at that forward PE versus Melly at a forward PE of 51. I mean, that just tells me that, Melly's a little bit overextended. Its target price is $18.40. This is pretty heavily covered too. I mean, you've got some upgrades to $16.50, upgrade to $2,000. So I don't think you have a lot of upside in Melly versus I do think that you have an upside in Amazon. If we go over to Seeking Alpha and we look at Melly, I think the quant's going to give it a pretty good score. It's a hold. The valuation is NEF, and that's the only place where you get dinged. It is the valuation. It's 11 out of 30 in the quant state. PDD is 4.96. They love PDD. eBay, Amazon. I mean, there's a lot of others. Macy's, which might be taken private. I mean, this is a nice $20 stock if you want to get into this one. They have no growth. That's the big problem with Macy's. But Melly, I don't mind it. I don't hold it other than probably in some ETFs. So take it what you want. I would, I'm taking Amazon over Melly. Hey, just want to congratulate you. This is Justin from Spotify. 4-year anniversary. I'd also like to appreciate you to know that I appreciate your douchiness. I listen every day on my way home from work. Hey, Justin, thank you so much. Peter from email. Congrats on the 4 years from the 9 to 5. Huge accomplishment. Thanks on Striker. Peter took his Striker. He asked me about Striker, and I said Striker. I'm not too big on it. Do you really want to buy something that is, at all-time highs? And it's not in my wheelhouse. This is a defense company. I was like, I don't like. Well, they killed it on earnings, and they were up 10%. He took it, and kudos to you, Peter. I mean, nice job there. I think that's a great trade. Me, yeah. I'm probably just slightly biased on that one. I'm wondering how bullish you are for the next few months. Also, do you hedge for a bear turn? Do you have stop sells to liquidate most of your positions? Could you cover this briefly in the pod? Okay, so here's my safety. I don't have one. So you guys hear me talk about it all the time. I have a plan. My own personal plan should not be your plan. I have not protected capital well over the years. I just It's a tech company. Stryker's a tech company. Let's see, SYK. They are a medical devices. That's what Stryker is. I thought it was defense. Sorry about that. MedTech. Peter, I don't have stop losses. I do have some in my retirement account. I have some of those in my retirement account for short-term positions. For long-term, you've heard me say it, when we get to these 52-week highs, when we get to these all-time highs, I tend to trim but not get out. I don't want to be out of a market, and it's gotten me killed. 2022, I did not beat the S&P. I beat the Qs. I lost less than the Qs, but I lost more than the S&P. It kind of moved me towards the S&P. In 2023, to begin the year, I was off sides. I wasn't in the Qs, and I noticed that, thankfully, early in January. I moved more towards the Qs. I wound up beating the S&P. I didn't beat the Qs because I think it was mid to late January that I got out. And by that time, we had already started the move. And I also had too much Apple and not enough Meta, not enough NVIDIA, not enough of the other things. So my position should not be your position. As far as learning how to do it, you have to figure out how you're comfortable. I am very comfortable losing 40% if my belief is that we're bullish long-term and I'm going to make 80%. So it's just more of a position thing. You can read about protecting capital. You can read about, in a brokerage account, you could cover yourself with options and hedge. You can use triple levered ETFs in your retirement account to try and leverage and hedge and stuff like that. I am not good at that. I am significantly good at just buying and holding. That is the core existence of my portfolio. SMCI, I have not sold a share. I have not traded that one. NVIDIA, I have absolutely traded, and I made a mistake. Apple, I have not traded. Amazon, I have trimmed. I have not traded. Google, I have trimmed. I have not traded. Microsoft, I have trimmed. I have not traded. So there's differences there. To go over all of my strategies, I don't think it makes sense for me to kind of give you guys that guidance. Look at stop losses, look at stop limits. Look at things like that for your retirement account. It makes sense as we're at the 52-week high. If you want to trim and you can do that, go ahead and do it. I am not that disciplined. I wake up every day. I look at the charts of my portfolio. I make a plan. I do it on the weekends. I take a look at the plan, move forward, and do this kind of thing. So, yeah. It's the weekends. It's the after hours. It's that kind of planning. I use Apple Notes. You wonder why I'm big on Apple. I use Apple Notes. I have a notes section. So I have a notes section for the podcast, and then I have a notes section for my personal stocks. And I update my personal stocks. I do a daily update. So when I'm doing stuff in the morning, I'm typically looking at my portfolio. I'm looking at the charts, and I'm saying, I might want to sell this. I might want to buy this. I might want to sell this. That's what I do. That's what you should be doing. Instead of listening to me, you should be out there just looking at charts. So that's my take on it, Peter. Let's look at scans. One of the Boyle got a cross up here. You can see the MACD's just kind of floundering down there. That's why we have a cross up. It still looks good. Natural gas is just too low, but we still have so much supply. That's the problem. So I haven't been trading this one. I haven't been looking at it. SRTY, which is a short of the Russell 2000. This got a nice little entry at 33. You're up 5% in this because the Russell is down, probably a good amount. SMDD, which is the mid-cap 400. This got a cross-up. It's flat, 1409. Looks like the cross-up, but it's trading at 1371, which is kind of where it opened at. So nothing real big on that one. This was an interesting one. SEC Limited. Now, the reason I want to show you this is because way back here, I put this channel in, and somebody asked me, I think somebody asked me about it, but this is a stock that I've traded in the past. It's on my personal watch list. It's an interesting one because since August, We've been in this channel. Now, my algorithm loses you 41% on this. Buying and holding loses you 73%. So this is a bearish stock, and it's probably bearish because it's a high multiple stock. It's an internet retail. This is the internet retail for Singapore. It's a foreign internet retail one. You can see multiple bottoms. Somebody did ask me about this, and I wanted to point this out because it is in my not own list. I've traded this in the past. We can look at a long term of this. It's just been a dog. Do you buy at the bottom? No. But you can see since August, this one's kind of put in a bottom here between 33 and 43. Does it come back up? It's still expensive. That forward PE of 49 is just crazy. The PE of 38 is crazy. In an economy that's probably not soaring, which is Southeast Asia. It could be. I just don't know enough about it. We had Win cross up. If you're into gambling, I like DraftKings personally. I think that one, I think I may have gotten out of DraftKings and I didn't get back in. But Win crossed up. Booking Holdings, BKNG. This is a travel stock. This has been on fire. I mean, this has been a solid gainer. Algorithm makes you 12% over 2 years, but buying and holding makes you 43%. It has just been a solid mover. It's at all-time highs. Again, do you want to hold this one at all-time highs? BKNG, we can look over here. The PE is 20, so it's below what SMCI is, but I don't think it's growing as much as SMCI, to be honest. The earnings per share next 5 years, 27% per year. If we look at SMCI, the earnings per share over the next 5 years are 39%. Oh, I'm sorry. Next 5 years, 39%. So, I'm going to compare everything to SMCI. It's just that good of a stock. LMT, Lockheed Martin, and it's still cheap. Relatively speaking, it's still cheap. The thing that you're going to have to worry about SMCI is when does the turnaround of, hey, we've spent so much money on AI, we have all the hardware that we need, now we need to develop the software. When does that start? And I don't know the answer. I have no idea what the answer is. But that's when you're going to want to get out of SMCI. But with Facebook saying we're going full head on, with Apple saying we're going full head on, with Amazon saying, hey, we need more AI because our customers are saying that, with Microsoft saying AI is the future. Right now, server space is super into it. LMT, final one. LMT is Lockheed Martin. It's a beaten up stock. May have an opportunity here. 429 is the algorithm buy-in. Look at that MACD here. Last time the MACD was down here was way back here in October. Nice 13% move up. You're under the 200-day. From a long-term perspective, again, this is a defense company. You are not quite at the 200-day, which is at 410, and there's a gap between 411 and 426. You could bounce off that gap. You could go back and fill it. So I'd be a little bit careful of this one, but I will tell you that the RSI is at 40, moving down. Just figure it out. LMT, yeah. Chris is saying it's still got more room to drop. Be a little bit careful. The algorithm loses you 5% on this. Buying and holding makes you 10%. It's an upward moving stock. The algorithm may not be well attuned to actually run on this one. Remember, it's mostly a tech volatile kind of stock. This hasn't been a super volatile one. But you do have this gap down here even to 403. So be a little bit careful. Okay, if you are interested in anything that I said, any of the charts, TrendSpider has a new 7-day offer. You can try this one for, it's no longer a free 7-day trial, $29 for a week. You get $29 for a week, and then you pay $149 per month. But if you like it, hey, you get a discount, $129. For the year, it's $83 per month, $9.96. So, click on this link, the top link on my link tree, linktr.ee. Click on that link. Sign up for TrendSpider. Email me once you do from the email account that you signed up with, and I will email you my 4-hour algorithm, the 65-minute algorithm that you can day trade with, all of the watch lists and the scanners that I use. They're all there that you can just click on it and import it. It's a great tool. That's my top tool. Second link is Seeking Alpha Premium. This is so you can see the quant ratings, so you can see all the analysis. It's $189 per year. That is not much. I will tell you, the $189 buys me back hours and hours and hours of research a week that I used to do on FinViz, just clicking on random. You can go over to SMCI and look at this info. It's great. If you have a smaller account, I am not dinging FinViz. I am just saying it took me hours and hours and hours of time to go through Zacks, which is absolute, just a mess. Investing.com, absolute mess. Motley Fool, they're talking their book. Yahoo Finance video, why am I watching Yahoo Finance? So understand what Seeking Alpha did for $189 is I bought back hours of my time. That's what Seeking Alpha Premium is for. You can import your own portfolio, and it's a $50 coupon with a free 7-day trial. But you import, this is the core portfolio. I get an email every morning, like I said, with the upgrades, downgrades, everything that changed. You get these sliders, which are great for the day in the 52-week range. It just makes managing a portfolio so simple. And that if you're doing that and you're not in Seeking Alpha, you're out of your mind. The third link, Alpha Picks. We went over how Alpha Picks picked out Twilio yesterday as their monthly pick. You can read all about it, a ready-made solution for your portfolio. Powell, which is up 50% just on earnings. Exxon removed from the portfolio due to the hold rating. URI and Comcast, they crushed it on earnings. Here's the webinar. You get all of that. Now, here's the returns. It's $100 for Alpha Picks, $100 a year. And they give you all of this research. You don't get access to Seeking Alpha. You get access to the Alpha Picks group, which is basically looking at their stocks. You can look at the portfolio. You can say, you know what? All of these have strong buys on them. You can say, okay, well, what's the rating on others? Well, there's a hold, there's a hold, there's a hold. Uber Technologies has a hold. This is at an all-time high. MI Homes is a hold. T-Mobile is a hold because it's just run so much. Marathon Petroleum, it's been huge. It's up 43% in the portfolio. MI Homes is up 236%. So you get access to all that. For $100 a year, you get access to this. Here's the performance. You can look at the performance. You get to look at these stocks. You get to look at everything that you want for $100 a year. It is absolutely worth it. I have been using that one, that group, to kind of go through stocks. It's fantastic. Now, Webull. I just imported a bunch of people who signed up for Webull. First off, thank you. Second off, why are you not putting money into Webull? I just had to use the website on Fidelity. Fidelity is my main broker. If you are interested in a brokerage account, just ping me because I can hook you up with my guy Stuart. But if you're interested in just trading and you have a smaller account or you have some other brokerage, I'd put money into Webull. I hate the Fidelity app. I hate it. I can't stand trading with it. I do like their market view. They have a new market view where you can trade on the computer. That's fantastic. It's web-based. It's browser-based. So I really like that one. But the app sucks. That's why I put $1,000 into Webull. I think you should get some free stock, sign up for Webull. And the final tool is the newsletter. I mean, why there's tens of thousands of people who listen to me every day. If you're getting this and you're not signed up for the newsletter, you're out of your mind. It's absolutely free. The education stuff, if you want the education stuff, get it. It's $120 a year. Sign up for it. I do spend hours upon hours writing this stuff. I've been getting great feedback on that. I will go into, let's see what the content is. Let's see, list of terms. Buy at or under this price. Kind of like I said, hey, $20 for Cleveland Cliffs, $80 for Shopify, $180 or $150, for Amazon, $400 for Meta. You want to know how I come to that? Honestly, it's a roulette wheel, but I do have a good way of looking at charts. I'll kind of explain it to you. No Man's Land, RSI, that's coming up. How I trade using confirmation, MACD, RSI, on shorter time frames. That's coming up. I'll teach you how to day trade using confirmation on shorter time frames with the RSI. Things like that. That's what I teach in the newsletter. So that's the paid stuff. And I do spend a lot of time on that. So those are the tools. That's how you look at that. If you want to join the socials, you just go up here. I got Twitter. I've got a private Facebook group. I've got Instagram that I'm active with. We even have Reddit, by the way. We have a Reddit community, just so you know, that I just assigned a couple of moderators to. I don't look at it often. I probably need to. But yeah, happy anniversary. Great. From Disembodiment. I love that guy. Thanks for the message on GOC. Yeah. Up 20 at a 20% gain, probably just temporary pop on the news, planning to take your advice and trade it. So get into the Daily Stock Pick Reddit. The link is on the link tree down at the bottom. I know nothing about it. I'm trying to make sure that we have members in there. Right now we have 28. I think we have, close to 1,000 on the Facebook group, if I remember correctly. But it's usually a pretty good community. And by the way, Disembodiment, ignore that. He's super nice, super sweet guy. He doesn't have any kind of stuff, but any kind of disembodiment, I don't think. Random Lettuce, he's good too. That Random Lettuce, I think, is the Bullish Bites. I think that's who it is. But yeah, I'll try and be a little bit more active on here, on Reddit. But again, join me. And I will talk to you guys on Monday. For the paid subscribers, I'll send you out an email over the weekend. I'll send out the newsletter too. Okay, take care. See you guys. Bye. Where is SMCI? 575. I'm going to add more. I mean, we've closed down yesterday. Let's see. We closed yesterday at 583. So I think anything below that, I think you're okay. Again, the PE isn't crazy. Do we shrink back down to the 50-day at 387? Probably not. The 9-day here at 539, that's realistic if you get this turnover that might happen. But I think the NVIDIA earnings, I think NVIDIA absolutely kills it on earnings. Is that a weekly green line, that support line that I drew? Let's see. Yes. See, so this is what I talked about back here in 2018. You saw this dip, and it took a while to get back up there. And then we hit that, and then we dipped again. And this is what I called wave 3. I think you just add to it. They have such a lead on AO right now. And so anything above this dip, I think you're in danger of dipping down below. But long term, that's the trend. That's the trend. I got a lot more than 25, Mike. I got a lot more than 25. Okay, she got out of Cleveland Cliffs. Okay. Let's see. Let me read your comments. Any thoughts on TSM and CHIPS Act money coming soon? TSM, so I talked about Intel halting the plant. TSM, I don't like it here. Understand, if you're gonna own TSM, Anthony, own TSM being fully aware that you're buying into a political situation. And I don't think China's going to make a military move on Taiwan. I think they'll do what they did with Hong Kong, which is just basically an occupation. And the question will be, does the U.S. respond? Whatever his name is, the president, Xi Jinping, or whatever, I forget his last name, Xi. Early spring. It's Groundhog's Day. Sorry. You're buying into that. That's part of the reason I bought Intel. Was I thought, hey, with Taiwan Semi moving up so much, I figured Intel, but they're delaying their Ohio plant. They're playing some games. I just don't think that this one has a lot of oomph left. So I think you're hitting that 200 day at 41. I'm getting out of it. I'm just getting out. I'm going to cut my losses and get out. But Taiwan Semi, ChipX mining coming soon. I don't think that's baked in. Remember, whether your grandmother's baking meatloaf or turkey for Christmas, it's already baked in the market. It's already in there. Yeah, Mike, get it. Yeah, 581 on SMCI. I mean, that while it's down at 567 right now, and I would be trading it. So here's what I would do. SMCI, because it's, and I said this, I said, here's the range, 568 to 578. I think that's the range that you entered today. It looks like there's another one at 550. So if we break through, but you can see it's bounced right off there a couple of times on this 5 minute. So I think 568, if you wanted to add more, I think you'd be fine. Again, it's all just a guess. But that forward PE, I don't have a problem with it at all. I've been listening for over a year and I've never heard you mention your girlfriend, dating, or females whatsoever in your life. Not to be my personal life, but Maya is not new. I don't even know if she's around. She's somewhere around. She's not new. I try and keep it a little bit. Listen, Ryan, I got a female listening squad that this is my moneymaker, Ryan. I can't be cluttering that up with relationship stuff, but Maya's not new. She's been around. Oh, no, I don't see her. She's not coming in. She is listening probably. Yeah, sorry, Ryan. I changed that one. LMT still has a lot more room to go. Yeah, price drop is on. Pavan, if I try 7 days, will it still be eligible for yearly monthly offer at the 7 days? You'd have to work that out with TrendSpider. I do believe that they will honor those prices. Whatever price is currently going on, I think they will honor for the monthly or the year if you try it, Pavan. But ask them before you get into it. Just so if you go over to TrendSpider, there's down in the bottom right-hand corner, there's a contact us. You can't see it on my screen, but there's a contact us. Even on, if you just go to trendspider.com, just make sure you use my link before you sign up. But there's a chat window, and you can chat with them right now. They're available with you. I think they're available 7 days a week. I think Jason said like 20 hours a day they have it manned. So you do get a pretty good response. It's not live chat. Sometimes you have to wait a couple minutes, 20 minutes to get back, but they're really, really good. And one of the things is, one of the reasons why I do pimp for them is I was a customer for a long time before I became an affiliate. And their customer service is just amazing. I mean, it really, really is. Chris, that's not a bad price to get into LMT, I don't think, is it? Trade that SMCI in a 5. Well, I shouldn't say trade it. Buy it on a 5-minute chart. LMT at 380. That's a great, yeah. October at 385. That's a steal at 385. Getting back in there in October. Prices at the bottom of the Bollinger 50-day crossed up on 200. Yeah. I think you have, what is it, Raytheon is what you have a lot of, I think. Let me see. I'll tell you how much SMCI I have. Because I just doubled my position in my IRA. Holy shit. Did Apple really come back? Wow. Stuff must be really going well. Because I'm even now. I was down almost 1%. I'm even. That's crazy. Let's see, all positions. SMCI. I have 75. Looks like I haven't doubled my position. I still have a lot of 25 that I have to buy. That's not good. That's not good. Snowflake's up 5%. Remember when I said to get Snowflake under 200? Yeah, so far on SMCI, I am up 124%. So, RTX, that's it, yeah. Okay, let me see. And I don't think Maya wants to be mentioned on here. But oh, for you guys. Motley Fool. Motley Fool says PayPal is their new recommendation. That's part of the subscription. Maya, people are asking about you. That's the subscription. People are saying hi. Hi. She says hi. PayPal is the new Motley Fool subscription that my dad has. That's the recommendation. If anybody, I'm almost pissed at PayPal, but that's the dog. The dogs love Maya. Full disclosure, the dogs love Maya more than they love me. Yeah, the inside voice out loud sometimes. It happens more often than you know. One of the big things that happens sometimes with Maya is she'll be like, remember when you said this? I'm like, no. Yeah. Chris, the problem I have with SMCI is I've made so much money on the brokerage that I bought at like 200 that I don't want to sell it. That'll be a tax event. And so I said this, confirming about how I manage my portfolio with a plan. I do that with taxes, but I do it significantly out further. And so I already have this year planned with how much money I'm going to make, how much taxes I'm going to pay, how my government subsidy for healthcare works out. And so if I wind up taking money out, then I've got to redo that plan, understanding that even though I'm going to have more money, and I don't need more money. That's the problem. I don't need more money. I don't need more cash. I don't need it. So it's going to cost me more money. And in a long-term position like SMCI, my theory is I'm just better off holding it. So the reason I'm building up that retirement account is if I wind up holding it and say it dips back down to 300, well, I'm going to sell it in my retirement account, hopefully hedging against that. Yeah, if you just retired, I'm 4 years in, and I've kind of learned a lot about planning, and it's kind of just, you got to plan out your, I plan out a year. So at the end of the year, when I figure out my taxes, I'm like, okay, what do I want next year to look like? And I'm in a good position where I work part-time contract jobs, and the only unexpected that I don't know is this podcast. And full disclosure, I make low 5 figures on this podcast. But it has grown. It's only 2 years. So if for some reason this thing blows up, then I'm in a situation where I probably should sell SMCI for a gain and just make more money, between 0 and 400,000. Or I should say 40,000 and 140,000, which are the tax brackets. Hold on, let's Google this. No, I'm sorry, because most of that would be 15%. Yes, so it's 400,000. Thanks, Mo. I'm not worried about it becoming huge. I don't want it to become huge because it becomes more of a problem if it does, Mo. And I like sitting here and talking with folks. This is my therapy. This is my. By the way, what is all the deal with Better Health? Let me see. Better Health affiliate program. Here we go. There are so many people on YouTube now. I must get hey, this video is sponsored by Better Health. So I want to find out. Fan Fueled by Wolfson, Editor's Choice, more niche. No, let's see. That's probably an ad. Let's see. Health affiliate programs. There is no Better Health. They must just be sponsoring people. Let's see. Better Health. Norin, high five, man. Nice job, 486. Yeah, have I mentioned SMCI before? BetterHelp, there we go. Let's see. Therapist job, reviews, advice about. I guess not. Therapist jobs. Private practice with no doors. If you're a therapist, man, this is like the way to go, I think. Start application because you can just log in and freaking do it. I should tell my mom to do this. She wants to do therapy. FAQ. No. BetterHealth.com affiliate program. Because I wonder, what is BetterHelp affiliate? There we go. I want to see what they're paying. Maybe I'll send you guys to therapy. When you refer someone to BetterHelp, they get a 7-day free trial. When someone clicks on your affiliate link and starts a 7-day free trial, BetterHelp, you will earn a commission of $100 out to you monthly once you have reached the minimum threshold of $100. Wow. So what? Wow, $100 a month. How much do you have to pay for Better Health? How much does it cost? Wow. Yeah, I guess $100 a month does get paid. So Norin, I went over this. SMCI, I think, will hit 700. I think that's my guess. And Norin, if you're just a beginner, understand rule number 1 of this podcast is do not listen to a douche on the internet. I am that douche. Number 2 is don't listen to Jim Cramer. But here's my thesis on SMCI. SMCI right now, you can see if we just go back to a long term. Okay, this is a long-term chart. It's a weekly. So since you're a beginner, I'll kind of point some stuff out to you. typically on a chart, you want to look at 3 points touching, and that's your trend line. If we look at the last time, the last couple of times, you can see this one in November 2022 was a bounce up. We really didn't start. This was the first bounce, but it pulled back. And then into 2023, we really took off. So if you look at that trend line and we touch 3, you're really looking at this being the trend line up there. And that goes up to $800. Now, it doesn't mean that you're going to get there. It doesn't mean that you're going to get there. But it does mean that that could be the trend. Now, what you're seeing here, too, is volume. And this is all technical stuff, and I'll go into the reason why I think fundamental-wise. But if we look at the volume, okay, we pull this back to the beginning of the trend line, and we say, okay, well, if that is the trend line, where is everybody holding at? So these volume shelves that you see over here, these are volume shelves of everybody that purchased the stock from November 21st, 2022 until today that still holds the stock. Where did they buy? There are a lot of people down here between 67 and 106. Those people bought a ton of shares, okay? Because you're seeing that bar there. The majority of people are holding between 243 and 300. So that provides you some level of support. The Bollinger Bands here, this is all of 2020, the late 2023, where see how that light blue shading cinches up and then you start expanding. The danger is this is expanding super fast. And you don't want to see it on the top of the Bollinger Band because that is FOMO, and that is basically, hey, it's out there. The MACD is super high. You never want to see it this high, okay? See how this hit about 280 when it got up to here at 59, and then you see this drop. Well, what did this stock do? Well, it just went sideways. So the danger is that we're hitting this top again at 60 on the MACD. Where does it stop and where does it go? Well, you may have a sideways move on this for the next 4 to 6 months. You very well may. While the RSI kind of settles down, the MACD kind of goes down, and then you make your other move. The other hand, this one could start to go up. So you really want to make your determination at 576. What are the catalysts of moving this? Well, if we go over to here, Seeking Alpha, and we look at SMCI, we can see the quant rating is strong buy, and I use that. The valuation's really a C. And why is it a C? Well, because the forward PE right here is 27. Okay, the forward PE is 27. That is a pretty good, percentage difference to sector. The sector median is 24, so it is on the high side. But where does this really trade with? And it trades with NVIDIA. And that's the crazy part, is NVIDIA's forward PE is 51. And the sector median is 24. So when I look at SMCI, I say, hey, it's kind of traded with NVIDIA. Let's look at another AI stock, AMD. They're at 46. So I kind of think that again, I think that the PE is low. So when we look at the chart, we can kind of assume, hey, it might put in a nice little shelf here, but rather than pulling back to this 200, 300 level, you might put in a shelf between 500 and 600. So yeah, Norin, my best advice on this is, yes, it's a pump stock, but it's got fundamentals to it. And SMCI is a hardware play. And hopefully you were listening when you heard me say the key to get out of this is when companies say we have enough hardware. We don't need it anymore. And that's when SMCI will start to crash down to realistic, when this forward PE of SMCI. I know. Hey, Maya, you out there? Hold on. Okay, you want to go under? Okay, come on. There you go. Sorry, but when the companies say, hey, we don't need any more hardware, we have enough. Remember, SMCI sets up the data rigs that are energy efficient to run AI models. And this is just one, it doesn't have a lot of fluctuation. They are restricted by the number of chips that they can buy, and that's it. So, and Norin, just understand, it's a douche thing. But this one is not something like Plug, something like Mullen. Let's see, Mullen. Mullen is MULN. They're not making money. You look at Plug, okay? They're not making money. You look at DWAC. They're not making money. You look at Rumble, okay? They're not making money. So a lot of those hype stocks, this is not. This is actually a stock that makes money and actually has some fundamentals behind it. So if you're new, just understand that the for me, the key point is being a fundamental and a technical trader. Technical trading, I take a look at the charts. I say, okay, where are we? What are we looking at? What's the big movement here? And then the next thing is I want to take a look at the fundamentals. So hopefully that makes sense. Now sign up for my paid newsletter, Norin. Yeah. And hopefully the 31 people that are here got that explanation. If I did, subscribe, because that's the best explanation I can give you. Okay, somebody. Rollins, are you here? Yes, Norin. It may drop. My theory on Norin, on SMCI is it will drop. It's a hardware company. They're not innovating. They're doing things with rigs that can be easily copied, but they have such a head start, and there is such a clamoring of data centers to get their rigs that it's not going to drop to 200 in the next month unless there's something that is just crazy wrong with the economy. But right now, the fundamentals do point to me as having an opportunity to get into a stock that probably is NVIDIA 2 years ago. And, we can take a look at NVIDIA's stock price, 2 years ago. I pointed this out on the weekly about the NVIDIA long-term. Did I point that out on the podcast, or did I just point that out to you guys? But NVIDIA, over the long term, I identified these three waves of, hey, here's the trend, and it's kind of just up on that trend. Now, if you buy it now, it may dip down to 350, but in my mind, you come back up to this trend of 800. So it could go down, it could go up. That's the chance that you take with the market. Is the market goes, it fluctuates. It just goes up, down. It goes up, down. So it is what it is. So, okay, guys, I'm out. It's 11 o'clock. I got to get started on this stuff because it takes me a while. I will talk to you